Hello all, my name is Nitin Kothari. Samco Mutual Fund is coming up with a new fund offer, which is Samco's Mid Cap Fund from 21st January 2026. To talk more about it, we are here joined by a market veteran, co-founder and CEO of Samco Mutual Fund, Mr. Viraj Gandhi. Viraj, why has Samco waited so long to launch the Mid Cap Fund now? It could have been launched a couple of years later, or it could have been launched a couple of years earlier. But why is Samco launching a mid cap fund now?
Very important question. Mid cap as a space was expensive in the past 3 years. We were trading at an elevated levels. What has happened in the past 12 months is that the PE of the mid cap index has corrected by approximately 25% from its peak level, but the earnings has gone up by 37% because of the time correction that we have spent for the past 12 to 15 months. And that's why we believe this is the right entry opportunity, not 2 years earlier or not 2 years later.
Perfect. So also help our viewers understand this, that what would be the style of investment in the mid cap space that Samco would be following, and why would that be?
See, if you take a 20-year data, there are 3 major indexes in the mid cap for us to read and learn from. Now, if you compare the size index, which is the benchmark of mid cap index, which is 150 TRI, which is based on the size, it has delivered a 17% CAGR over a long period of time. If you take the same mid cap index and compare a quality mid cap index, it has delivered an 18% CAGR. But during that same time frame, the mid cap momentum 150 index has actually delivered a 23% CAGR. Now this 5% additional CAGR over a 20-year period leads to 2.5 times higher performance than benchmark over a 20-year period, which is very staggering. So we are going to adopt the momentum style of investing in the mid cap space.
As you rightly mentioned, Viraj, that a momentum based mid cap index itself has delivered about 23% CAGR. So what is the core difference that Samco Mid Cap Fund is going to adopt as compared to maybe a passive mid cap fund, passive mid cap index, if I may put it that way?
So another fundamental question that you have raised, the difference between actively managed mid cap momentum fund and a passively managed mid cap momentum fund is that passive rebalances the portfolio every 6 months. Now think of it that we are sitting in the month of January and the next rebalancing of passive will happen in the month of June. In between that, if we get any major event, maybe domestic, maybe global, then the market will react very fast, be it upside or be it downside. So there will be a faster rebalancing that we will be approaching, that we will be taking care of because of our proprietary model. So this is the first major fundamental difference. Second difference is our proprietary model, where we have incorporated absolute momentum, a relative momentum and the earnings momentum. So we take care of all the 3, where passive takes care of only absolute momentum of the stock particularly. And third is the 20% hedging that we have inbuilt in the system, because of which whenever there are corrective phases, we'll be able to protect the downside because of the hedging mechanism. So when we compare all these 3 points compared to passive, where passive has already delivered a 5 to 6% alpha over the benchmark, this will add another 2 to 3% based on our backtested model compared to the passive momentum index.
Absolutely. So if I were to take this opportunity and summarize all these things, the reason why Samco is launching a mid cap fund right now is because the valuations have corrected, at the same time the earnings have caught up. At the same time, the style of investing that Samco is going to follow is a momentum based style, which has already delivered about a 6% CAGR outperformance over the broader index over the last 20 years. And at the same time, by adopting an active style of investing where we will be rebalancing at much faster pace, we'll be using hedging as well as our proprietary model, we should be able to generate wealth for our clients over a longer period of time. Thanks a lot, Viraj, for that.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.